Hello and welcome to GZERO World. I'm Ian Bremmer, and today is all about the global economy under quarantine.
We basically stopped everything. And so output has kind of gone to zero for huge swaths of the economy.
Is it back to business as usual after life support? What are the risks? Are there any opportunities? To help me sort it out is a special guest, financial historian Adam Tooze, a man who uses lessons from the past to help chart the future. Remember the good old days? 23 million new jobs over a decade, the stock market on parade. Growing debts had to be repaid, sure, but those were the days. Or were they? A similar question was asked 84 years ago in the midst of the Great Depression.
But just how good were the good old days? The woman in the home. Not often do you hear her grandchildren sigh for the good old days, not if they really know how she labored from dawn to dark.
The country had endured hardships before. It would emerge again. That was the film's message. And to some extent, it was right.
Where do we go from here? Straight ahead and don't spare the horses.
The U.S. would rise as the world's preeminent superpower. A belief in American exceptionalism that came from our founders was a guiding path, driving investors and buoying consumer confidence. Granted, if you were African American, sitting in the back of a bus wasn't exactly exceptional. And if you were a woman, neither was job discrimination or harassment. But with economic collapse came opportunity. The Great Depression, the time when 1 in 4 workers were made jobless, would prove a turning point in American politics. Roosevelt's New Deal kickstarted realignment around relief, recovery, and reforms, ushering in unprecedented government involvement in the economy. And so the question today, will coronavirus prove a similar catalyst? Those with that reasoning point to stagnating wages, yawning inequalities in wealth and income, and a shortage of affordable housing. Even before the crisis, 40% of Americans polled said they'd struggle to pay an unexpected bill of just $400. Now, throw in the fact that most people get health insurance through work, and tens of millions have since lost their jobs, and you get the picture. Comparisons to the 1930s are there. Those like Nobel Prize-winning economist Joe Stiglitz say the nation is on course for a second Great Depression. Its infrastructure ill-equipped for mass unemployment. Some estimates suggest 1 in 3 people of working age could be out of a job. The IMF's managing director added that we anticipate the worst economic fallout since the Great Depression. Does that mean an appetite for a New Deal? Not necessarily. Remember, this crisis is fundamentally different than past downturns. It wasn't a banking bust, a dot-com bubble, or a housing collapse, all results of underlying weaknesses in the system. Instead, this time around, it was the deliberate shutdown of economies.
I would expect economic activity to resume and move back up in the second half of the year. Very hard to say precisely when that will be, and it will really depend on the spread of the virus.
So far, the Fed has twice issued emergency interest rate cuts, the first time it's done that since 2008. Washington has also approved a series of aid packages targeting businesses and the newly unemployed. But this isn't 2008. 12 years ago, the world acted in concert to address the financial crisis. These days, as nations look inward, multilateral responses are distant memories. And so what comes next has as much to do with domestic politics as it does with international finance. Adam Tooze, welcome to GZERO World. Thanks for joining.
Yeah, pleasure to be on the show.
Let me start with asking you, as an economist, an economic historian, how bad is it?
It's looking really bad. I mean, one has a sort of professional skepticism about claims to novelty as a historian. But I think into the first or second week of this, we had to give those up. As soon as the American unemployment numbers came rolling in over the last 5 weeks, these extraordinary 3.3 million, 6.6 million people signing on for unemployment benefit. And now we're in the 5th week of numbers, each one of which would have just simply been unthinkable at the beginning of this year. We've had to abandon that sense that we really know how to navigate this territory, that this is familiar ground at all. The negative oil price is another symptom of really the radical nature of this shock. The huge withdrawal of funding from the emerging markets globally, which again is unprecedented in its breadth and scale. And then the numbers that are beginning to come out of global organizations like the ILO, which monitors labor relations globally. You don't normally operate on that scale, but because this shock is happening to everyone simultaneously, we need somebody to tell us the global labor market picture. They think 2.7 billion people currently are trying to work and earn a living under conditions of lockdown. That's 81% of the global workforce. It just hasn't been anything like that. 1.3 billion kids furloughed out of education at this point. An entire generation that wherever they meet for the rest of their lives around the world will be able to look at each other and say, well, what happened to you at that moment? Of course, the experience will be radically different in, a slum in urban Africa or Manhattan private school, but nevertheless, everyone will have that shock in common. This is really new territory that we're in.
Is it true that the Chinese end up by default having the most effective model to respond to a crisis like this? I mean, certainly they would have us believe that in terms of the way they're presenting it publicly. How credible do you think that claim is?
I mean, I think it's very difficult for an outsider to judge, and I'm not going to position myself as a sort of China expert.
No.
But what you see is clearly a determination on the part of the regime to manage the story. On that, at least, they clearly are the most concerted and have the apparatus to do it. Whether it's credible to the outside is, of course, another question. There are certain facts which speak for the fact that the regime is handling it differently. I mean, it's a fact that VW only has one car plant or one set of car plants up operating right now that produce cars that are sold to people, and that's in China. So that's a reality that a global corporation like VW will have to reckon with. But I would, I think, urge the case for the South Koreas of this world as an alternative, which in many respects may represent a much more optimal kind of package, if you like, in terms of the civil rights limitations that were imposed, and altogether maybe even the trade-offs in terms of health outcomes and economic outcomes. You don't ever face the moment where you actually have to say, would I rather trash the economy or save a couple of million lives? That's not actually a problem that anyone would ever want to face, and it's not obvious that Western democracies are very well equipped to face it. But that's the scenario that we ended up heading towards by late March, because we were late. We missed the start gun.
Putting your hat on in terms of assessing the economic policies that have been put into place so far, and some of that has been developed world, and certainly those are the biggest numbers we're looking at. But we're starting to see from Brazil, for example, we're starting to see from South Africa, for example, some pretty significant fiscal packages as well. How would you assess early stage?
The two, as it were, historic breaks are the scale of the initial lockdown decisions and then the counter-reaction, which has been equally epic. I mean, we've never seen anything like. We're seeing fiscal moves around the world. In Europe, the Germans stepping across the famous line of the black zero and the debt brake. Very substantial fiscal stimulus there, and then flanking that and enabling it, because you can't do the fiscal stuff unsupported because bond markets will freak out. This is where it really gets sort of utterly mind-bending. I mean, the Fed in late March was buying $1 million of assets a second. I first stumbled over that and went to my computer and multiplied up the seconds. Yes, it's absolutely spot on. It's like $90 billion a day in assets. That's what Ben Bernanke's Fed was buying in a month. The questions for me are all about the medium-term time horizon, right? In a crisis, everyone's the Keynesian. And in an election year in the United States, the GOP is all on board too, right? And they've got their man in the White House. So there's no need to cause any embarrassment to anyone. And that makes a huge difference to 2009, right? In 2009, this same political party voted almost to a man against a stimulus which was half the size. The question really is, what are the political implications and what is our capacity to digest the consequences of this 18 months from now? And how explosive is that going to be?
But before we get to 18 months from now, let's just talk 6 months from now. I mean, because, when I see a $1,200 check for the average American doesn't make $75,000, that's not lasting them 18 months. When I see the bailouts so far for small businesses, that's not lasting them 18 months. We've already spent, trillions of dollars in the United States, over 10% of GDP that has gone to this relief. As we look forward the next 3 to 6 months, and the Americans are facing the same kind of challenges that the Europeans are, that the developing world will in a much more acute way, what do you think?
I think the really critical test is how much of this lockdown is in fact really the result of government action, and how much of it is, in fact, just precautionary behavior on behalf of private citizens. That, I think, is the really fundamental question. If you look really closely, if you time slice it, it's why I put my historian's hat and go back to the timeline. Big sectors like the automotive industry was shutting down quite spontaneously, independent of government orders. The Tesla instance is quite misleading because they had to be forced to shut. GM, Ford shut. They were forced to shut by trade unions that were simply saying, we will not cooperate, we will not send our members to work. Then they look at their supply chain and realize they can't get the components to make the cars anyway. And then they look at their yards, they look at their showrooms and realize no one's buying any cars. So
the New York schools had a similar situation.
Exactly.
De Blasio tried to keep them open. And
that's what we felt.
Are we're not sending them. Yeah. Teachers we're not going.
We feel it in American cities, in those institutions, but that was happening to the largest bits of the global economy.
Yeah.
And so that's kind of remarkable on the one hand, and we know that politics kind of lag behind. But the question, of course, is then, can politicians wave a magic wand and start it all again? And that's very far from obvious. And then the question is, where do we get as Keynes would say, the animal spirits? Where does the optimism come from to restart this economy? I mean, how many of us are going to be going to restaurants?
Well, Dr. Fauci has been saying that. He's saying we're going to follow the virus itself will determine, right, and how society thinks about the virus, not the governments. But if that's true, if that's what we actually think, what then is going to be required from these governments in terms of stimulus in a real way? And is it plausible to think it's going to happen?
Well, I think we maybe need to adjust away from stimulus. We need to be thinking about more sustained life support. I mean, that's to talk about this in terms of stimulus has always been a bit misleading. And that's where all the war economy stuff came from. It's really not our problem. And it doesn't recognize the novelty of our situation. We need to pay people to stay at home and not work in their conventional sense and not operate their businesses. And the upshot of what we're saying here now is that if you follow that logic and think of this as a more societally generated process, then what we may need to do is to support people, short of a medical breakthrough, highly effective testing where we can actually reassure ourselves, we basically are going to have to live with a lack of confidence. And then the state will, in some sense, have to step in and to replace certain amounts of private activity, but there will also just have to be extended life support, because otherwise many of these businesses are just never going to come back.
And if that's the case, then you look at the banks, which right now feel pretty good because of the regulatory changes. They're better capitalized. But at some point, how do the banks keep functioning if they don't have the business?
The JP Morgans of this world, the Wells Fargos have stacked aside billions of dollars because they know those losses are coming down the line. Our problem right now is that because the unemployment story has moved so fast, all the other indicators which we know are very tightly correlated, it's just common sense. If people lose their jobs, they don't service their credit card bills, they default on their car loans. They haven't quite caught up with the pace, of the shock. I mean, we've seen the horrifying pictures. People are driving to food banks in their SUV. We're in an asynchronous reality right now. When the synchronicity begins to be restored and you've had to, hand back the SUV, that's when the damage is going to begin to hit and bite into the balance sheets. And it really will be a test of time.
So let me now go to the 18 months in. And it's interesting that you used that time frame. Let's assume that there is a vaccine. And it's coming online just about then. Is it plausible in your mind, or what's the likelihood that by that point we're actually in a global depression?
I mean, the funny thing is that this shock has in fact induced a conversation amongst economists about how we define a recession and a depression. Because we know what a recession is. It's 2 back-to-back quarters of negative growth. It's all very clear. You just count them off. It's arithmetic. I don't think we actually have a clear definition of what a depression is, because there's only really been one in the modern era in the United States anyway, and that's the depression of the 1930s. Europe, you could argue, experienced one with the Eurozone shock, and the Italian economy, I think, by any stretch of the imagination, should be described as depressed.
Greece, certainly.
Greece, yeah. So, I think we could well imagine a situation with unemployment still very high, with consumption down. You'd expect consumption in due course to rebound, because that's largely driven by, our day-to-day needs. The thing to really worry about, I guess, would be investment, which, is fundamentally driven in the end by, the calculation of profit up against some scenario of how you think the future world's going to be, in which whatever you invest in is going to generate profit.
So, you would imagine unemployment in that scenario could still be 15% plus in the United States in 18 months' time?
I mean, I think I'm not going to wager. I'm not with many people. I'm not even going to wager a strong unemployment estimate for this summer.
Yeah.
Who knows? I mean, the American economy, after all, does have considerable rebound capacity. But to come down from the numbers that we're headed towards this summer, it wouldn't be implausible that you would be in the teens 18 months out from now. No, on the contrary. In fact, I mean, given how high we're likely to go, a number around 20% is altogether possible at this point. We may need to start taking lessons from the experience of the Southern Europeans in, Europe, who've been living with, double-digit youth unemployment in the 20s and 30s% for a decade. I don't think that's a likely scenario for the US, apart from anything else, because the welfare system here is so minimal that that's really a barely tolerable state of existence for people who are in that condition. But no, I mean, the unemployment, we're going to be, I think, facing a prolonged unemployment problem.
So one thing we hear a lot from President Trump, and I think a lot of Americans believe, is when he says we had the greatest economy in the world, we'll just build it a second time. I mean, given what we're seeing here in terms of how many people are suddenly being thrown into what certainly doesn't feel like American standards of living, did we really have the greatest economy in the world?
Well, I think one of the questions that's been posed, not just in the last 3 or 4 months or even in the last 10 years, but really for many Americans for the last 50 years, since the 1970s, is whether the idea of an American economy of which they are all stakeholders is in fact a meaningful concept at all. I mean, the president's clearly right that there are pockets of incredible affluence, of great success, of technological prowess, of world-conquering corporate ambition. Like, think of the tech firms, think of the way in which American banks have swept European competition out of the way. Corporate America, elite America, is one of the great winners of globalization, unsurprisingly, since they were the architects of that project, have acquired other people along the way. The Chinese now are major contributors. But that just doesn't capture the reality of middle America, let alone the bottom 20 to 30% of the American income and wealth distribution, who have seen barely any real income growth. There's huge argument about the statistics, but there's very little real dispute about the fact that the real incomes of those at the bottom third have seen barely any progress since the bicentennial. American history divides into two epochs: moment of the American dream up to 1976 and the period since. And what this crisis does is, of course, hit precisely the weakest communities. It hits those who are most fragile, whose health insurance is precarious, who are working, part-time jobs in the service sector. It hits women as well. And it turns out, from a medical point of view, it hits the African-American population, all of which are groups also which have minimal financial resources. We know that 40% plus of American households can't basically cover expenses for more than a few months without a paycheck and have precious little financial reserve and basically no net wealth. So those people are going to suffer a fundamental shock here. And this idea of rebuilding really, or making them whole, begs the question of what it is that we would plan to return to, because they weren't whole in the first place.
Adam Tooze, thank you very much.
Thank you.
That's our show this week, and if you like it, and I know you do, because otherwise, why would you keep watching? It doesn't make sense. It's kind of like self-immolating. Come back next week and take a minute to sign up for GZERO's excellent morning newsletter, Signal.